Sanjiv Bhasin is also joining us, and we'll take that point forward from the market standpoint. Sanjiv, so much of hue and cry about impending correction, and what we got was just 10% from the recent top on mid cap, small caps. And between 14th of March and now, which is the week, we have clawed back more than half of it, especially non-banking PSUs. Is it over before it even began?
Yeah, good morning, Ajay. Well, that is what typical bull markets are. You can keep feeling the fear when the markets correct, but they had reached zones where there was overbought readings on a lot of stock sectors, and the SEBI diktat, the overall play on stress test on mutual funds, all that meant that an artificial correction took place. Remember the words artificial corrections never last too long, but they are painful. But in bull markets, the retracement is sharper than you thought. And Ajay, we live in strange times. The Dow, the Nasdaq, the S&P, the Japanese Nikkei, all are in a upward momentum. New highs are across the board. So I think that it's about time India started to smell the coffee, and we think that the result season will be boding extremely well. Now everything is on earnings, and short-term macro can be, but we think the economy as such is doing very, very well. And now as we get more clarity on elections and so on, you should see one more rally coming before the election. And I am very, very positive now on some of the mid caps, particularly the PSUs. I have been bullish across the board on oil marketing companies, on REC, PFC, some of the banks, particularly say a bank like Union Bank. I think numbers will be standout. We had a buy on this closer to 55, 57, then 100, 140. I still think Union Bank is headed to 200. And selectively, we think stocks are going to do extremely well. Cement, gold lenders, REC, PFC, your federal, the mid-cap banks, and I think that the broader market will again start to do well, but it's going to be the Nifty which can actually spearhead on the back of Bank Nifty, which I think can be a huge outperformer. Falling yields and lower inflation bode well both for the indices and for the banks.
Bit of a weather it seems, and Holi is approaching. Please take rest, otherwise you'll get drenched and you'll fall sick, and our viewers will be devoid of great trading ideas in a rebound.
Yeah, you're in a sweatshirt and everything. How bad is the situation, Sanjeev?
Well, Avan, actually, I have just reached London, my daughter's graduation, so I am on leave for a week. So it is 14 degrees here, hence the cold. So it was a surprise. I just flew down, and I thought I'll take a holy break in the sense the holy festival break, and that's why the little warm, wear.
When you're joining us London time,
Yeah.
thank you
for that. Yeah, it's quite late.
So committed, 3 a.m. Okay, that aside then, wanted to put the spotlight. We were talking quite extensively about Reliance Industries as well, and clearly the analyst view is that the earnings downgrade cycle is now likely ending, and that this new $10 billion debt reduction is going to be quite critical. At 2,900 levels, what's the view?
Firstly, Avan, thanks for the compliment. Yes, it is 3 a.m., but like we said, markets never sleep, and so do the participants. Our duty is towards helping people come back, and we were saying that you will get a sweet rally, closer to Holi and beyond. Reliance has been a bellwether. Now we know that on the added front, the new entrants into their new verticals all are going to be capital intensive. Oil to marketing OTC has started to generate cash, but still there will be talk of how they can sell extra stake and so on. However, like we said, it has been Reliance which has been the pillar which has taken the index to new highs. We still think, sorry for the throat, we still think that banks are now going to add up. HDFC Bank could regain its momentum. Like I said, most of the bad news is in there. 2-time price to book is a very good time, but we still think Reliance is headed higher. Sum of parts is 21 lakh crore market cap. Over a period of time, we think 25 lakh could be very much on the cards is somewhere during this year.
Time, Sanjeev, Let's get in your take then. What's the outlook when it comes to the entire consumption basket? Where is it that you're finding preference? I know you've spoken about a lot of those QSR plays. Would it extend to maybe some new age tech as well?
Correct. Avan, Zomato has been the star over there. PB Fintech has done extremely well. Devyani, I think, is an outlier. It will be over a period of time as the spending patterns in rural India start to pick up. You can add, what has happened is there is replacement taking place in the basket from Pizza Hut, more preference to against Domino's, and that constant change of preferences will see some more market cap being added to Devyani. We also like we said, in the rural income, Bata and Patanjali. In fact, Patanjali has been on record as that one-off which they made as a statement for cure on illnesses. And they've, I think that will be part and parcel that episode gets over. They are gaining more and more traction in their, anything to do with the food and after the acquisition of Ruchi Food, we like Godrej Consumer, we like Nestle as a top line in nifty component. But ITC could be a dark horse here, given that the overhang of BAT selling its stake now means that over a period of time there could be a demerger of the cigarette business, which will be really value accretive. See, ITC used to be in the low single digits as far as margins go on their FMCG business, which is now expanded dramatically. And I think that could be a real money churner over a period of time. So ITC is a dark horse on the FMCG basket. And I think that could be a real good play, given that now we could look at the demerger of the cigarette business over a period of time.
I don't know if you've been tracking Reliance Power or not. Ajay tells me that it's been locked in upper circuit for 3 consecutive days now.
Well, Aisha, as a disclosure, we owned Reliance Power from that 3.5, 4 rupees and Reliance Infra closer to 85. That was a punt taken on the sheer market cap discount which it was giving. The stock has seen that Anil Ambani is in the process of reducing debt, paying back lenders. I think that all bodes well for this entity. It had got a large part of the, almost, I think, 4,000 megawatts what it was generating. But the debt burden was a huge, overhang on it. As the process of power being an outlier has been there, all power companies have started to show positive EBITDA over a period of time, particularly the one which were servicing high debt. And if power remains in this surplus generation where, IRRs have improved, then that could be a real outbundling for them. But, like I said, we bought it when it was maybe 1/10 the price it was when it was a throwaway asset. Right now, there is a little bit of frenzy and ownership of power assets because they've been the best performing asset class in the last 2 years.
Okay, that's the view coming in on Reliance Power. Meantime, I just want to take a note of some of the interesting brokerage notes that have trickled in this morning. Goldman Sachs has come out with their latest report on the footwear industry. Metro Brands, Bata, they've initiated a buy and a neutral rating respectively here, saying that the branded footwear segment is underpenetrated in the country and has a long way to go, and that there's going to be sports and athleisure that will be multi-decade double-digit growth opportunities. IT, of course, we're talking about it quite extensively. CLSA has now said that there's a sharp downward revision guidance, which implies that there's going to be no major pickup in the second half, and they're cautious as a whole on the sector. Sanjiv, your stance on the space?
Well, like we said, Bata has been our top pick. On IT, we still think Wipro and HCL Tech in the large caps will stand out. Yes, there could be a little bit of to and fro on margins, but we think that, overall, the environment in the US is turning positive, which means if yields fall, inflation threat lowers, and if there is a rate cut, then that means attrition overall will be very, very positive. And we've seen the transition into cloud computing, into AI, and each large cap now has separate, verticals for that. So I still think HCL Tech and Wipro are two of our favorites, which you should add on all decline. Bata for us could be an outlier, purely because branded footwear and the, migration from campus to smaller to a tier 2, tier 3 to Bata and then contract manufacturing vertically, they are doing extremely well. As a disclosure, all these three stocks are in our portfolio.
Good morning, Sanjeev. Well, yesterday was a bit unnerving, hitting that one-year low, and all sectors really came under pressure. What is this indicative of? Can we erase those 2024 gains completely?
Yeah, good morning. So, Avan, in the short run, I think we are definitely very, very oversold in anticipation of the Fed news and some of the profit booking, which has been more to do with the SEBI diktat, the mid-cap pressure, and I think balancing of books. I am very, very confident we will defend this level. We should see 22,300, 22,400, closer to that, and we will take it from there. However, like I said, 8 days of decline. I think we've seen most of the capitulation take place. This is generally the time when the markets start to rebound, and we expect a strong rebound, particularly in the large caps, where I think the smart money has been moving in over the last 1 month. So yes, select mid caps, but large caps are going to outperform. I think we have bottomed out in the short run. The Fed move will be one of the events, but once the event is over, like I told you, after Holi, we are looking at retest of maybe the previous highs, but the Nifty is going to lead the market going from maybe today onwards.
Okay, seems like all that shake-off is pretty much behind us. But I think the talk of the town, Avan, has been Zomato. It's a pure veg mode that they're getting into with a pure veg fleet. In fact, we have some visuals as well coming in there. That, of course, is Deepinder Goyal's tweets, highlighting that it's going to be an all-green, pure veg fleet that they're going to have for... a pure veg mode, which they're going to now have on their app separately as
well. There was a lot of backlash as well, actually, on social media. Yeah. Lots of mixed reactions. People saying that there could be concerns about implication of this decision, harassment maybe of delivery partners in the usual red fleet, because you can see that these guys are going to be dressed in green. But yes, we had a lot of clarifications from Deepinder Goyal saying that it's strictly serving a dietary preference. So, yep, that's the view coming in.
That's the clarification coming in. He's saying that we will stay alert for any such, unusual cases. He's given a clarification saying that the need arises. Please note that this is a pure veg mode. Pure veg fleet doesn't serve or alienate any religious or political preferences. To make this distinction was a purely dietary requirement distinction that they made. But Sanjeev, all this aside, I'm guessing now you would be ordering your food, considering you're a vegetarian as well, on the pure veg mode on Zomato.
Yes, Aisha, good morning. You are right. I am a veg, and I think Zomato is now getting slowly getting more traction. They are innovating in their product line, distribution line. So I think the stock is going to do well. We've had a buy on this rating since much lower levels, closer to 50. We still think this has more steam, but I think the veg part will be well accepted by majority of the people, including me. I think the social media will keep, having its own issues on who to troll and for what. But I think this is a very, very welcome move.
Just read out what Deepinder Goyal said. He's saying that there's an opinion that some societies and RWAs will not let our regular fleet in. We will stay alert for any such cases and work with these resident welfare associations to not let this happen. We understand that a social responsibility due to this change, and we will not back down from solving it when the need arises. Please note that this pure veg mode or the pure veg fleet doesn't serve or alienate any religious or political preferences. This, of course, comes on the back of the backlash that they faced online from a section of people over the launch of their pure veg mode service. But that's that on Zomato. Kunal, how are the charts though looking?
Well, it's one of the strongest one from the new age, new age listed names in 2021. So I think we were discussing this point that yesterday, the likes of Nykaa, Paytm, Policy Bazaar, Fino Payments Bank, etc. Many of these stocks which are listed in that time frame, I think only Zomato is the only one which has managed to make a fresh high. In fact, cross over that 2021 high by a margin of, I think, few percentage points. So 169 was the high that time around. 175 is the recent high the stock has made. Even the last 1 month of the price correction, it's been a very mild correction for Zomato. So
Remember, the stock is typically considered as a high beta name, and after I think 10 or 11 months of consecutive price action, when you see a meager 10% kind of a correction, that too into a slow drift, it indicates that the medium to longer term charts are still very positive for the stock. So would be bullish on the stock, and I think dips closer to 150 odd levels should be taken as a good buying opportunity.
All right, that aside, what's the view then on Ultratech? And given that the CCI approval for the acquisition of Kesoram has been received close to 7,600 crore rupees, Sanjiv, your take?
Yeah, so Avan, see, Ultratech is arguably the largest player in the country. Kesoram is one of the group companies. They consolidated first the business from Grasim. They took over some of the assets from JP, and then they are in the process of consolidating their business. Arguably, now you will see the best season for construction and cement demand rising. I think input costs have fallen. This would be a very, very big positive. They would now reach somewhere in the range of 145 to 150 million tons, which arguably is more than both Ultratech and Ambuja put together and double of that. So I think they are consolidating their presence in the market. You know that 53% of cement sales is in the hands of five players. And I think Ultratech on any decline would be a buying opportunity. This is one of the pillar stocks of the Nifty. And we think that construction activity, as it gains more momentum, Ultratech, once price rise comes, will be much better placed. Also, you must realize petcoke prices have fallen reasonably, which should aid their margins.
Okay, there you have it. That's the view coming in on Ultratech. Meantime, some of the other stocks as well that will be in the spotlight include an IndusInd Bank. Remember, we just discussed how they said that the cost-to-income ratio is expected to improve by about 100 basis points in FY25 and 26 each year. Sanjiv, this coming in as a positive.
Correct, and I think from what I heard that they are also seeing intense competition as far as the deposit or the liability franchise. But they are garnering themselves. You see, what has happened is, along with HDFC, some of the marquee names have not cut rates. And that is what has set them apart because, yes, the credit to deposit ratio has been on a little skew, but I think it will even out. The credit cost guidance reducing is a very big positive. IndusInd has been one of the star performers as far as the private banks go. And I think their biggest niche area being the auto sector. That is where they will really be much better placed as auto sales are at an all-time high. So I think this is a very good fit after this correction. And I expect Bank Nifty to actually lead the winners this time, particularly on the private bank. So yes, IndusInd, ICICI, Kotak, Axis, HDFC, that whole basket is looking very, very strong.
Okay, that's the view coming in on the entire private sector banking space. We'll also understand a little bit more about the FMCG sector in a bit. But in the meantime, why don't we get in your thoughts, Sanjiv, as to what's looking good amid the underperforming FMCG basket? Where is it that you're finding pockets of value in a market like this?
Yeah, so we see two of the picks have been Nestle and Godrej Consumer, and they are in the large cap. Bata and Patanjali are two names which we have. Patanjali has got in the eye of the storm after the recent Supreme Court talk on the ads regarding the medicine. But I think that's a passing storm. The type of growth we are seeing is unprecedented, particularly in tier 2, tier 3 cities. And their margins are bound to expand. So, be a little contrarian, pick up Patanjali around these levels. We think this is a passing storm and it has only more talk rather than actual effect on the underlying performance. The company has been an outperformer. We think this is the best time for rural incomes to grow. Bata is the other pick, which is again very, very strong play on the contract side, margins expansion and the advent of people moving from the campuses to the Bata, brand. Brand aspiration is what drives it. Nestle and Godrej Consumer remain two of our top picks. And we think that they are the ones which will gather more market share as this rural consumption starts to pick up. And Devyani also. Sorry, I didn't mention Devyani in the QSR. That is our top pick.
Oh, yeah, absolutely. Devyani is something that you've been bullish on for a while. LT Foods, that's going to be one stock which is going to be in focus as well. Abacus Asset Manager LLP, that's Sunil Singhania's firm, bought about almost 1% odd stake in the company yesterday. The data, of course, came out in the bulk data in the evening at a price point of about 162 rupees per share, thereabouts. Sanjiv, I don't know if you're looking at LT Foods closely or not. Are you?
Yes, Aisha, we had a buy on it closer to that 35-40 range. It's been a multi-bagger. It is arguably the third largest rice exporter, and they have diversified their field, from rice exports to munchies. If you go on an Indigo flight, the munchies which you get are all products from LT Foods. So they have diversified their portfolio. They've done some overseas acquisitions. And even though the margins remain low, but the food security thing means that rice as a product will continue to see much more traction. So they are one of the best performing stocks as far as the basket of food security goes. But their lineage lies in the new products which they've launched. So next time when you fly Indigo, see the munchies which come. It will be from LT Foods.
Okay, without disclosing my flying preferences right now, but when I do fly Indigo next, I will definitely watch out for that. But Naresh, tell us what your chart reading is of LT Foods. Does 162 thereabouts right now look like a good entry point?
Yeah, the stock looks interesting. The stock made a top around 230 levels. The previous low in September to say November was closer to this 150, 155 mark. So good enough correction from the top 230 to 160 done. And for the last, say, 6 to 8 months, the return would be closer to zero. The stock had made a multi-year breakout around 130 odd levels, which was the high back in 2022. So, and that was on good volumes as well. So at 150 to 165 looks like a good entry point. I would have a stop loss below 150. The only concern has been the fact that the whole sector has been doing roughly a downtrend, whether it is KRBL or Chamanlal Sethi and other names. So out here, the best performing one has been LT Foods. So would stick with LT Foods, but would be careful in terms of keeping a stop loss below 150.
Okay, fair enough. Just taking a look at what happened in yesterday's trade amidst the broader end of the market, and in particular within the small cap universe. Remember that index in tandem with the frontliners was also down about 1%. Names like Intellect Design, Amber Enterprises, BSE, even Exide Industries dipped about 3.5%. PVR, Inox and Graphite India came under pressure in yesterday's trading day. Just curious to get in your take then, Sanjeev, as to what the outlook is when it comes to the very favored defense and railway basket. How are you reading into these stocks in an environment like this?
So, Aman, I think you can start to nibble into those sectors. But if anything you want to buy on PSUs, we are more bullish on oil marketing companies and the power financiers. See, IOC, PPCL, this is an induced correction of 2 rupees price fall. It will be made up right after the elections. And I think their refining margins may come at the highest ever in the history of the company. So, use this decline to add IOC, HP. IOC, HPCL are two which we are very, very bullish on. And this could be a heaven-sent opportunity that this 2 rupee cut is been taken negatively. It is not the 2 rupee which is mattering, because both the MDs have come on record that this is not going to affect their profitability at all. In fact, they are saying that pricing freedom is there. Their other ancillary products are doing very well. The other players is REC, PFC, where you saw a record dividend from REC yesterday. The solar panel, wind energy, the whole basket is doing extremely well. The recovery from State Electricity Board is at the highest in the history of the country. And I think REC, PFC are now, even on an ex-dividend yield, looking extremely positive. So I would go with this basket. You can nibble into Hindustan Organic and Hindustan Aeronautics and BEL. But I would say there the execution will take time. OMCs and power financiers are in a very, very sweet spot on lower cost, higher NIMs and higher refining margins, which I think will be evident in the coming quarters.
All right. Thanks very much, Sanjeev, as always, for joining in and sharing with us your outlook as well as your interesting tidbits of information. Okay, let's...
If you like this video, then like, share and subscribe to ET Now.